Good day, everyone. Well, we're in what I'm calling an MPD market. That would be multiple personality disorder market. Just can't seem to make up its mind. We've got the Nasdaq and the S&P kind of moving sideways, but not very constructively because we've seen some selling pressure take hold just in recent memory, where leaders get smacked. The market averages meanwhile may go down maybe 0.5%, but the leading stocks might go down a few percent or more. And then you can actually see that action in PEIX this morning, where it's doing nothing wrong on the chart. You know, you've got the pocket pivot early on, and you're sitting on some nice profits, and then just get slammed right back to the 50-day in one go on a lot of volume. So you got to be really quick in this environment. This is also another reason why it's always necessary to have in your sell stops, mental sell stops. You don't have to have them live, but you should have an exit point. In this case, it hasn't violated the 10-day, but as we've said, you know, in this kind of market environment, you take your profits when you've got them, and this one certainly has given some good profits in a short amount of time this year. And this year has been really void of stocks that have had clean patterns. And so when you see something like this, you know, you probably already took your profits. Actually, I would imagine about a week ago when it had kind of a nice 4-day run, 5-day run actually, when it was fairly well above its 10-day moving average. Meanwhile, we are sitting in a holding pattern as far as the market direction model and UVX. They're in cash. They're waiting for an upside breakout or a downside breakdown to conclude this current pattern. Right now, we're seeing, like I said, it's a kind of a MPD market, because we've seen days where stocks are going to get hit pretty hard, and then we've seen days where they, well, yesterday was more constructive in that, you know, you see something like Apple, which came off very hard 2 days ago, try to redeem itself, and we've seen that action in some of the other leading names as well. So it remains to be seen what happens next, but of course, stay tuned. And apart from that, we've got commodities, which looked like they were turning the corner for a little while, and now they're heading lower once again. We're seeing similar action in the oils. It looked like it was heading higher, but now it's making new lows. Gold and silver are as well plumbing new lows there. If you can see on the silver chart, or SLV or GLD, both of these are at, yeah, it looks like SLV's at least a 1 or 2 year low there in the pattern. So that speaks to troubles in the economy. As we all know, the European countries are still having much difficulty. There was renewed evidence of the continuation of the economic malaise over here. And of course, what happens in Europe and in the UK and the US is fairly coherent, in the sense that there's a good amount of correlation in how these economies are performing. And we're not really seeing bright spots anywhere just yet. The Fed knows this, so they continue to keep the QE spigot turned on in some form. And of course, the ECB, that is the European Central Bank, recently turned the spigot on even more on full. So that bodes very well for a continuation of QE, QE3, as we've shown in the charts as well. When we had QE1 and QE2, the market was overall in a nice relentless uptrend. QE3, which started in January of 2013, shows the same kind of effect. So if you're going to time the market, you could time it one of two ways. You can time it where you have a core position and you've been sitting on it since January of 2013, or if you just got into the recent buy signal, you would have then ignored the cash signal and you'd be still sitting on your core position. I've been doing that with SVXY since October. and SPXY is a volatility instrument which correlates with the market. So when the markets go up, SPXY goes up even more than the market. So you're getting, in other words, more bang for your buck. You can do the same thing with a 3X ETF that mirrors the NASDAQ or the S&P. I would recommend actually the S&P is a family of ETFs is a great way to go because you'll see that the risk is very limited. The worst that the S&P's come off since January 2013 is 6.1% peak to trough, whereas the NASDAQ and the Russell, which give more bang for your buck, but they've come off, I think the NASDAQ's come off 9.7% and the Russell more than 10%. So in terms of your risk management, if you want to play less risk but a reward that is almost commensurate with the NASDAQ, I think the S&P family of ETFs is a good way to go. And with that said, I'll turn it over to Gil.
Well, let's see. Okay. My take on the market is that you have to be in the right stocks at the right time, and you got to know when to sell them, and selling into strength generally works pretty well. But the thing is, you're not getting anything trending, so you have to kind of recognize that there is no real trend here to play. The market's chopping back and forth, and you see that in the indexes. We came up nice and smooth and straight, tight ranges for the most part on the way up, out to new highs above the 4,600 level on the NASDAQ. And now notice, you can see how these ranges now are starting to get real wide. So the market's running into some turbulence, and I guess we'll see whether it tightens up and is able to come out of this and go higher, or whether it rolls over. You've got how many distribution days here we got, Dr. Hay? 2 in the, right off the peak here. Those are pretty good sized distribution days here and here. So you're getting some selling into this, and you also see it in some of the names. Not everything is working beautifully. I had a great start of the month in September, but it's hard to make a lot of progress beyond that. Unless you're going to be 200% long Palo Alto Networks on a day like yesterday, and I was only 100% long. So in any case, after being about 25% short, but we'll get into that later. But if the market's going to be schizo, I can trade like schizo too. So it takes one to know one as far as I'm concerned, and I can handle that. So I just trade like myself, just be schizo if the market wants to be schizo. But what did you call it, Dr. K? MDP? Manic?
MPD for multiple personality disorder.
Okay. Yeah. Okay. Anyways, is everybody awake out there? I'm just wondering. I know it's late in the week. It's Thursday morning. I know it's 1 a.m. in Sydney, Australia, and everybody is awake. At least one person is awake. I just want to make sure. I guess everybody's speechless. I think you have to be careful in this market. I think you take your shots where you see them and trade them. This stock, which I think this is such a perfect stock for the market right now, Loco, which does what I call the locomotion every day. If anybody remembers that old Grand Funk Railroad song. Here, let me just kind of jog your memory real quick here. Everybody's doing a brand new dance now. Come on, baby, you locomotion. So basically what I do is I buy a position in Loco every time it comes under 36. I put that song on, and then we do the locomotion higher. And the stock is trying to get through the 38 level, but you sell it in there every time, and it comes right back in. Sort of, if you look at this, you're drifting a little higher. I didn't really like the action today because you're drifting higher, volume's drying up. You picked up a little bit. You're stalling off the peak. I think it needs to yank in once, and I'm sort of sitting around watching for that to see if that happens. That's right. That was Grand Funk Railroad, so we're all dating ourselves if you know what that is. Loco, what is the rule of 3? The rule of 3 is if something does, and this is just something that O'Neill told me, and you observe it occurring in different ways, but it's not like some hard and fast rule. It's just that you might see something once, twice, 3 times. By the 3rd time, it fakes everybody out, and the stock turns around and goes higher. So kind of like what Twitter's doing right now. I'm noticing it just turned green. Lovely. Let's see. So I guess you had to buy it this morning, but they're pricing a $1.3 million, billion dollar rather, secondary of convertible senior notes or something like that. I always think of a bunch of bond paper sitting in an old folks' home when you hear that sort of stuff. But in any case, That's the rule of three. Is basically something happens 3 times, and on the 3rd time it actually works. So so far Loco isn't really working here. It's still stalling out, but I think constructively this could pull back on some light volume. It did that yesterday. I thought it was I figured it would move higher today. Had a good chance, so I bought some yesterday when it pulled back, and it turned around this morning, went higher. I think after sputtering around to the downside, and it's still kind of chopping around. But I think this market it's tough. It's very tough. Thoughts on jazz? I don't know. You know what I think of that question. What is there to think? It's just up there. Had a big pocket pivot. It's gone higher. It's up there. What other thoughts are you supposed to have? Must be a newbie. What are your thoughts? Oh, somebody says, remembered the song but had no idea it was Grand Funk Railroad. Yeah, it was, believe it or not. They did a bunch of other songs that were big hits back in the day. In any case, what else we got going on here? So, I think you're seeing some nice moves in stocks, but you always have to guard against what Dr. K was pointing out with this PEIX. Is like they're acting fine, they move higher, and all of a sudden one day they just slam them. We saw that a little bit with Silica is running up there, but you can see here it's getting a little extended. It's kind of an accelerated, somewhat parabolic move up. 1, 2, 3, 4, 5, 6, 7, what, 9 days in a row? What is it? No, 8 days in a row up, and you could actually say 14 out of 15 days up here by the time it gets to the peak, and then it comes in hard. That almost seems normal. So, that sort of thing will happen from time to time. You see it gets hit here, and that makes it very hard to sit through. You come down, you do hold the 50-day, but here's a stock that for the most part was doing pretty well along the 10-day, and then it gets slammed, and that's kind of the story of the market for the most part. So any other exciting questions here? Some other names I'm looking at. I think Taser looks okay. They had it up over 18 this morning. I thought that was probably a good spot to sell it and see what it does. Bouncing back after coming in earlier. And it's hanging along the 10-day. You figure that's going to be your support level. It hit it perfectly yesterday where it could have been bought. So again, when you're looking at the market and it's coming in and you're thinking, I need to be opportunistic here, I'm going to buy something coming in. And I think that is the way to be operating for the most part. Buy into weakness and sell into strength. But be ready to run quickly if it doesn't hold as you think. So if I see Taser coming into the 10-day, my alert goes off. I guess that's around 1701. Probably was a little lower yesterday. Now it's 1721. Here, yesterday was 1701, so now it's up to 1721. So you see it pull in there, and you buy some, and if it keeps going through, you might have to back away pretty quickly. So you want to keep a pretty good eye on these things and not give them too much room. So basically, run a tight ship. And someone might ask the question, I think it's a fair question to ask, how do you determine when to be opportunistic, and how do you determine when you need to run for the hills? And one of the things I do, and again, I'm going to be schizoid just like the market. I'll give you an example. Is if I think the market's weak, I think something like this will fail. So we come in the morning, and it opens up, heads up 95 or so, and so gives off a little a peak signal on the 620 chart. And I'll short some, and it starts coming in right away. So I'm thinking, oh great, this is gonna, it is gonna reverse. The market's looking pretty grim. I think we were negative, minus 50 on the Dow at the time, and then it comes down 92, 50 or so, maybe a little above that, and all of a sudden you see the bids start coming in, and you can feel the buying pressure pushing against you very quickly. And so what you do is I'll cover and go long, and that's what I did. And I went long a pretty huge position, and by the end of the day we closed close to 100. Today we're over 100. I'm going to sell into this, and I sold everything on this position out. And that's basically how I'm going to operate here. I think it can get going. It comes in here. Somebody asks, what's the comparison to Apple? Well, if you look at Apple's chart from 2004, it's basically an uptrend channel. So in other words, the stock, it's stopping and starting and stopping, starting and stopping, starting and stopping. It's just really choppy and sloppy, and you're wondering, what's up with this turkey? And all of a sudden, Apple has this big gap up move out of the trend channel, and it takes off on a run. Now, I think one of the things probably going to hold Palo Alto back a little bit is the fact that It's probably not as big a stock as Apple was at the time. It's a little bit thinner and more volatile, and you got a little bit of headwind with the market going on here. So I think you got to kind of keep an eye on that as well. But I think it should probably come in a little bit and see how it holds in here. But I'm going to sell into this move based on the percentage move on the size of the position. That's just the way I operate. I know it's not perfect, but you know, I'm up upper double digits this year. So if it's working, it's working. And so I'm not going to start trying to get tricky and hold positions and watch them come all the way back in on me, which a lot of things will do. So you have to take these profits. It's not, like I said, it's not really a trending market. Little Eva did Locomotion first in 1962. Yeah, but I think Grand Funk Railroad's version is way better, way better. So, you know, but that's my opinion. Let's see. So anyways, getting back to this Apple thing, that's all it was. It was just a gap up like that. I mean, go look at the pattern in October of 2004. If you can't see the difference, then you probably shouldn't be trading because you don't understand what the chart looks like. Anyways, where were we? Twitter. This thing's going to piss me off. I thought I was real smart not owning it coming in this morning once it's jacking down, but it holds in pretty tight and now it's heading back up. I don't know. I may have to buy this back. Anyways, do you anticipate entry buy points and place open orders in advance? No, I don't place open orders in advance. No need for that. I just watch what the things are doing and come into them when they hit what I'm looking for. So I don't have a. This is my job basically, so I don't have a day job per se, a real job per se, and so. You know, I think I'm as opposed to somebody who's got a job and they can't sit there and watch the screen. I can sit here and watch the blinking lights all day long, and so that's my advantage. But I don't set orders ahead of time because I want to see what the conditions are of the move. If it's breaking down to the moving average, and I'm not going to put an order at the moving average because how do I know it's not gapping down and they're going to hammer me? So I think that sort of stuff is not really practical, and I think it exposes you to potential danger when you really don't need it. Let's see. What is your view of the huge supply that Alibaba brings to the market? I don't really care. Why do I need to care? It's a bunch of stock. I don't think anybody should buy it. I think their website sucks, personally. You know, pardon my use of the word suck. My wife hates that, actually. My kids complain to me that, why do I get to say suck and they can't? And I said, that's because I'm an adult, but they don't really get that yet. In any case, I don't really think it's anything. Somebody asked about Loco. Are you kidding me? Where would you just get here? You're going to have to look at the video again. Let's see, unless you want me to play the song again, which I think is definitely worth another shot if we wanted to. Let's see. The danger of Alibaba is funds will sell other stocks to buy it. What other stocks? You know, they're going to sell their Facebook and their Twitter to buy such a great stock like Alibaba? I don't think so. I think you're thinking too much, frankly, honestly. So, you know, give it up. Don't worry about it. Alibaba is going to come to market. What do you think? It's going to be some sort of like a big suction thing that's going to suck all the money out of all the other stocks in the market, and it's going to come down. Are you kidding me? Please. I mean, okay, there are things that can keep you up at night, but that sort of thing just tells me your brain isn't really working properly and you need to have it adjusted. Because that's not really how it works. And as O'Neill used to say, you know, they'll go and sell some junky stock, maybe like Plug, and buy. They're not going to sell the leading stock. So yeah, let's sell all our, Facebook, Twitter, Palo Alto Networks, and buy Alibaba just because it's there. That ain't going to happen. I think they're having trouble getting the offering subscribed to, personally. So, anyways, market goes in, market comes back up. Look all over the place. So they might. Well, if you want to stay up, at night worrying about stuff like that, I think you're being silly. So, but I don't think that happens at all. So I think if stock comes public, it'll be like for example, when Facebook came public, did that suck all the money out of all the other stocks? When Twitter came public, did that suck all the money out of the other stocks? So I can't believe you're arguing this point. Anyways, congrats on a great year-to-date performance. Any secrets to your success you can share with us? Well, I just talk about it every time I'm on the webinars, and that is that first of all, I can sell short. So if the market comes down, I'm going to say half my performance this year is due to being short. And as I pointed out a little earlier, what I'll do is, like a day like yesterday, the market's coming in, I'll test it on the short side. And usually when I short, it works very quickly. You don't have to sit around there, playing with yourself, waiting for the trade to work. The stock will collapse very quickly. And I remember in the end of February, early March, that I just put out some shorts, and all of a sudden everything's working. So I put out some more, and they're all working too. And so everything starts working, and it's a beautiful thing. And you can get a sense of it very quickly. And that's how I'll short, and that accounts for half of it. So if you can short, that helps, especially in a volatile market that's as crazy as this one is. And then the other part is just being very active in terms of trading stocks, taking a 10, 15, 20% move or sharp upside moves in the stocks and then going away and waiting for them to set up again. That's how I do it. So, but it requires experience. It's not something I can distill into a formula or, throw up some signal somewhere on a website and tell you, oh, buy this here, buy that there. It really doesn't work that way. Something I buy this morning I may not own by the end of the day. I may not even own it more than an hour if it doesn't work the way I think it should work. But the only way you can get good at trading, I'm sure Dr. K would agree, is you just have to do it and gain experience at it. So somebody says, when FB came, public funds were using Apple as an ATM machine. Sure. How do you know? Did you call them and find out? So, I mean, if you're still going to make the argument that you need to worry about Alibaba sucking all the money out of the market, then that's up to you, but I think it's stupid. So, that's all I have to say. Enough of that. RFMD pulling into the 10-day line. This one's another one that goes and comes in, goes and comes in, goes and comes in. So if you want to buy it on weakness, go for it. Maybe it works. I don't know. But I'm not. It's sort of a smaller stock, and it has nice moves if you can catch it. But I think it's more of a trader than something I'm going to try and own long term. GoGo. They came out with some announcement yesterday. Stock's gapping up. I don't know. Dr. K, is that a viable gap up move? Look at where you're coming out of this position on the weekly chart, so you're way down there. So I'm not really sure this is something I need to own.
Yeah, it's a bottom feeding pocket pivot. Some of the bottom feeders have worked very well in this market, but I would say that if you're going to play bottom feeding pocket pivots, the company should have a better pattern than this one. I mean, it had a gap down just a few months ago. It's under the 200-day. Well, by definition, bottom feeders are going to generally be under the 200-day. But I think there's more risk with this also because it's not institutional quality. The market cap on this is $1.5 billion, so it still could be defined as in smaller cap territory. And I think the best bottom feeding pocket pivots are going to be more liquid and have larger market caps so that institutions can step in with size.
Yeah, and let me make it even easier for you to figure out on this one. If you understand the rules for a viable gap up and you think Dr. K and I are full of baloney, which we could easily be. I mean, it's happened more than once. You buy it using the intraday low as your stop. Okay, so if you're looking for us to tell you, yes, this is great, buy GoGo, sell your house, your wife, your kids, everything, and put it all into GoGo here, this is great. No, it's a trade. You have parameters here. If you don't like Dr. K's opinion or my opinion of the stock as not really being, my view is more technical. I think you got some overhead here, and I don't think it's got enough room here. We'll see what happens. I mean, I could be wrong. So if you think there's potential here, then you can just make the trade based on the parameters of the trade. The low today is 1752. It's trading at 1819. So you're about, 60. What is that, Dr. K? About 60 cents? Not quite. So what is that percentage-wise? 3%. 3.5%. So you're about 3.5%, 4% from the stop. Even if it filled the gap all the way, you'd be down 6% probably. So, as far as a trade goes, I would say, yeah, I see that. Okay, but I don't know if I'm necessarily going to buy it. But you can try it. You don't have to, just like you can run for the hills, sell all your stock and run for the hills because Alibaba is coming public. You can do that too, I suppose, if you don't agree with my view that it's silly to worry about stuff like that. Worrying never makes me money. I was explaining this to my son last night. He's basically now becoming more of an apprentice, so he can take over the family business. And so, Dr. K, you're going to have to work with Alex going forward. Anyways,
that'll be cool.
yeah, he's probably less obnoxious than I am, but I was explaining to him, he says, like, well, do you worry about stocks? And I said, no, I never worry about anything. If I'm worrying, I sell it. Worry is not an investment strategy. Concern is not an investment strategy. So, you know, someone says, your opinions are highly valued whether I agree with them or not. That depends. Put them on the open market and we'll see what people would pay for. I guess they do pay for them to some extent. So, anyways, let's see. It looks like Yelp's volume is coming down as it moves along the 10-day. However, it looks like the 10-day may be becoming downward sloped. Any thoughts on this? I don't know. Get a protractor and you can measure the angle of the downward slope. To me, it's just pulling back. I mean, look at this move. I mean, first of all, whenever you're looking at any action, think about what is the context of the current action. I mean, you had this sharp move. Why weren't you buying it here? Why are you suddenly worried here about it? And as it comes in, you had a pocket pivot here, but as far as I'm concerned, that pocket pivot failed, and it's living below the 10-day line. So I don't really see any attraction here on this name right now. Now, it might set up and hang in there. It's on balance, you're getting better upside volume in the pattern, but it did have a big move, so this is going to need some time to heal. Anyways, let's see. Next, let's see. Hope is not an investment strategy either. Yeah, none of that stuff is. Let's see. Any more questions? I want to focus on questions. So, I mean, I think in terms of stocks to buy, there's very few names out there that seem to be holding up. I know they cratered all of these Chinese stocks the other day. The CM, you know, I saw this thing the other day. I should have bought some, but see, it's a one-day wonder trade. You're seeing JD running into some problems, getting hit on volume yesterday. Now it's back into the 50-day. This should have gone out of here and taken off, but in this market, that's not what happens. I like this. Irma Bombeck. Boy, now you're really dating yourself there. Irma Bombeck, and don't forget Ann Landers. Throw her in as well. Remember Ann Landers, Dr. K? Maybe not.
What's she up to these days? Does she still write that column?
I think she died. I don't know. She's an advice columnist. Yeah, you remember that. But there's also Irma Bombeck. She was more of a humorist, but she wrote a humorous column that talked about, you know, life as a family life and stuff like that. For those of you not, you know, back in the days when people actually read newspapers that were printed on paper. But let's see, Tesla, worries like a rocking chair. It gives you something to do but never gets you anywhere. That's Irma Bombeck's quote. That's basically the quote for the day. Good choice there on that quote, I think. Tesla is hanging along the 10-day. My guess is you're going to need to back and fill a little bit. So I got to tell you right now, I sold my longs on the jumps this morning, and I'm hanging out. And there might, you know, this P looks like it might be a short here. Some news about them joining up with somebody, big deal. But I would watch this news, so I got a little bit out here, just testing it into this area right here. So around the 27 level, a little above, so around the high of the day. Let's see. Grub-a-dub-dub. Grubhub. These guys look beautiful, come out of this great base. You know, and okay, someone will say, oh, well, that's an improper double bottom base. Yeah, and so is this one. So, you know, to me, all that's BS. They either work or they don't. I think the biggest factor here is you get this big breakout. Stock looks great, and then they come out with a 10 million share offering. That's a lot of stock to dump on a little guy like Grub. It's a thin stock. It trades like 575,000 shares a day. For me, that's pretty thin. Although I'll come and I can work a position of 5,000 reasonably well. Can't say I'm all that comfortable, but and it's a thin stock, and it's going to take some time to absorb all that supply. You're coming in today on is it lighter volume this morning, Dr. K? Can you tell?
Let's see.
No,
it seemed like
44% above average. So piece of garbage. Anyways, let's.
Oh, on this one, yeah.
This MBLY run, yeah, it went for a run. It's an IPO U-turn. I know these guys make this technology for driverless cars, and I guess that's caught everybody's imagination. Things have been on a run. But here's an IPO U-turn. I guess it could be bought here. And that is, well, there are no real, that is sort of a pocket pivot breakout. So SPLK, Splunk, I bought this one at the end of the month, and I had it on the first day, and that thing was running. It's wedging slightly on this ascending flag up to the 200-day, but it seems to me that any time it pulls back, you can just buy it, and that seems to be the ticket. Let's see. FEYE. Let's see.
Yeah, that Splunk was another one that had a well, in this case a bottom fishing viable gap up. That did work, but it's the market cap on this is over $7 billion, so it's firmly in mid cap or larger territory.
Just watching a couple of names here. Let's see. I think the only reason FireEye is moving is because Palo Alto Networks is moving. So I'd rather own the leader, not the laggard. So. Let's see. Dear Abby, that was Ann Lander's sister. Is gold bottoming for now? Do you trade the nugget dust pair? No. I think that requires too much thought. Let's see. Nugget, what is that a long one? Is that the gold miners? I don't see any bottom here. Besides, we're not really bottom fishers per se.
Yeah, and the miners have had a tough time. I mean, it's very tough to know when they're actually going to have bottomed. Yeah, better up using your mind on other things that are more constructive.
Okay. I'm just looking through some of these pullbacks in here. Dr. K, what impact do you see in the markets from the possible Scottish independence?
It's not something that I really pay attention to because, again, it's noise. You'll see it in the pattern. You don't need to know really, okay, are they going to become independent or not? Who cares? If it has a material impact on the markets, you'll see it. You'll see it, and it'll be evident. But to get swayed by all these news events that do occur, whether they're significant news events or not, is irrelevant to the market action. That's all that matters. What are the price volume charts telling you? What are the overall markets and leading stocks telling you? That's what you need to know. You don't. I would also add that looking at the news, watching the news, being glued to the news is probably more destructive than constructive because it's liable to scare you out of your positions prematurely. Or you might interpret a piece of news as something very optimistic and load into stocks prematurely as well. So it goes both ways.
Yeah, I think it was a joke question though. I don't think it was a serious question.
Right, but some of them are, and sometimes there are significant news events, and as we said before, if the market doesn't react to it, then who cares? It doesn't really matter.
Exactly. Let's see. I still like Solar City is one that I think is setting up slowly. Let me see. I got some alerts going off here on these pullbacks.
Now, this group had a big jump in group rank in the last week.
Yeah, the solars look interesting. So, let's see.
Yeah, it's SPWR and FSLR, two of the leading ones, are very close to potential breakouts. in the pocket pivot, so we keep an eye on these.
Which one is that? FSLR? I'm sorry, I'm in the middle of putting out some trades.
Yeah, FSLR and SPWR are looking pretty good in terms of.
Yeah,
well, the group took a big jump forward, and it looks to me like these are also setting up, and along with Solar City.
Yeah, Solar City had a pocket pivot in here, so you pull into the line here, and it's hanging in pretty good. Volume's drying up. I think this stock's going to go. Let's see. I'm watching Palo Alto Networks real closely here, and I just bought some back on the blip back over 100. So let's just take a look at this. Since this is a real-time webinar, I can show some of it. But we'll see what happens here. But it's acting okay here. So you're actually holding along here. The pullback's taking you back in here. You've held some support. You're drying up here. So it looks like a Wyckoffean pullback. So if I sold into this now, I'm looking at potentially buying this thing back. And looking for it to hold basically this low in here probably on the pullback. But I know so selling is starting to taper off. It's probably going to depend on what the market's doing. So another one that's picking up here is the Solar City just turning right here and starting to look like it wants to come out of here. So let's take a look at the Loco, which is still going Loco now. So you came in, now you're trying to turn back to the upside. Looks like it might want to turn. Alexion, someone's asking about. To me, it's too choppy. I just don't play with it. There's no buy signals in there unless you want to consider, let's see, would this have been a, no. I mean, maybe back here was a pocket pivot here. I don't know, here. A pocket pivot breakout. But notice how it's not going anywhere. So it's not a name that I'm really interested in. So I noticed Taser's moving. I bought that back a little while ago, coming back up into positive ground. CRM. Looks good. You got to buy it off the 10-day though. So, but I've been talking about this one, buying it off the 10-day in here, and that would have worked. So it's acting okay. Nothing, nothing really to say about it other than that. Okay, where are we? WW. This one, I'm getting the wrong symbol in here. White Wave. These guys make almond milk. Now I should have been all over this thing earlier because I drink a lot of almond milk. But you have this gap up move here. It gets real tight in here and then it goes higher, so it looked viable. But now you're extended, so there's really nothing to think about here. Let's see, PII, Polaris, pocket pivot. No, that didn't clear the 10-day. It is off the 20-day though. But I don't know. It's just kind of going sideways in a flag formation. That's what it looks like. So nice and quiet in there. Let's see, everybody's going to buy Solar City now. I know it's starting to tick up. ARUN, Aruba Networks. Is that one on the comeback? That hasn't hit my screen. It's probably because it's too thin these days. Yeah. Well, I don't really think there's anything here to get involved in. It's too extended. So, okay. Baidu. Had the pocket pivot, but it didn't go anywhere. It's a big name. It's a big, slow, stock, and it's an old name. So I don't, a lot of these moves. I think the time to own this thing was here, and then you had the gap up to sell into that. Now you get a pocket pivot. It's going nowhere. So it looks sketchy to me. Let's see. Any other questions? We got 20 minutes left. Let's see, what else am I seeing here? I'm watching the Loco. It's trying to hang in there, doing its best. Let's take a look at that. There it is on the. You always get this action where it runs above the 37 level, almost gets to the 38 level, and then wham, somebody comes in and sells it. They got to be working these guys off. So I don't know. Let's see if it dips in again. Let's see. Yeah, everybody buying Solar City now. How about SunPower? Everybody should buy SunPower too. Let's take a look at that one. coming in, you know, pulling back. Usually this stock is a buy when it's down. Let's see if I can make it tick up now. Come on, you guys, push it up. Let's go. Let's see. LinkedIn. LinkedIn is hanging along the 10-day line. So to me, this thing looks like it's just holding along the 10-day. You had a pocket pivot here. It's just holding along the line. There's not much going on. Volume's drying up. Maybe you get another pocket pivot. So somebody says, my odd lot trades can't push anything up. I feel for you. I remember those days. Bayo Resorts, that's a big pop. Yeah, you know, look how ugly it was looking, and then boom, there it goes. Oh, let's see. No more brilliant questions? GBX. What's that, Dr. K? It's pulling back to the 20-day moving average. This might be in a viable position. Hard to say, though. Netflix. This is another one hanging along the 10-day. Not really going anywhere. You get some selling into the the rises here, but hard to say whether that's a top in the stock. I think if it violated the 10-day in a serious way, then it might become a shortable situation. Love had a pocket pivot yesterday, actually. You see that right there. It's somewhat extended, so if you really want to buy, I guess you can. Illumina. To me, this is another old name that doesn't really excite me. Trying to break out now, it's living underneath the 10-day moving average. I can't really say, something I want to own here. So it's trying to set up, but it's kind of a late-stage pattern. So to me, it's a little dangerous. Let's see. LTM setting up for a leg up. What is LTM? I don't know. You got any comments on this one, Dr. K?
Wow. There's a lot of gap ups and gap downs in the pattern. A lot of volatility in there. It's not something that I would be interested in because it's very volatile, and it's just I don't know. You look at the weekly on this thing, and it's really never made a move.
No.
In years.
That's what it looks like.
So I wouldn't mess with it.
No play for Dr. K. Okay. Let's see. JD violating the 50 DMA. Well, it has to. Let's see. What would you call these closes underneath the 50-day, Dr. K? What's your take on that? Is that a violation?
Yeah, it's always contextual, and that close is more or less on the 50. Yeah, it closed a little bit under the 50, but in context with the chart, I would say that's a 50-day close. So it hasn't violated the 50-day yet. You'd have to undercut yesterday's low for violation.
Someone says, seems a lot of stocks are extended. Correction due? I don't know. The market is actually correcting as it's pulling back. This is correcting and pulling back, going sideways. Does it come out of here and go higher? Maybe it does. I don't know. I can't tell you for sure, but all it's doing right now.
Well, odds are that the market could easily come off a couple more percent down to their respective 50-day moving averages, and then just resume the uptrend with QE pushing
right.
higher.
Amazon 65-day exponential violation. You really shouldn't have to ask us that question. You should know what the definition of a 50-day or 65-day or any moving average violation is. And essentially what that is hang on a second, everybody.
I'll just do it. It's just close. You close below the moving average, and then on any subsequent day, you break below the low of that close.
Right.
Sorry, the low of that closing day.
So if this is a 65-day exponential, you close underneath there, and if you go below the low of this day, that's a violation. So let's see. I know you're just trying to fill up the space here without question. Glog is a dog, so I wouldn't touch it with a 10-foot pole. SYRG. SYRG. A little craziness on the fingers there. Let's see. I wouldn't be messing around with this one either. Cheap little stock. I don't know. Trades 900.
Yeah, oils are hitting lower as well.
No opinion on that. There's nothing there to buy. Why waste your time? Let's see. TSEM. I saw this one. It had like a pocket pivot here, I think it was. No, where would it be? No, I forget. Maybe this here, a little pocket pivot. But it's a cheap little semiconductor, so yeah, it's probably not going anywhere.
Yeah, I mean, be careful with these because they're thin, and it's market cap's about half a billion. So, in this kind of environment, it's not very kind to these sorts of names, and it hasn't been for actually a number of years.
Right.
And you can see on the Russell 2000 this year, it continues to lag the other major averages. So, I would generally stay away from these types of small cap names in this environment.
It's still lagging. Look at that. Someone asked, what sort of entry were you looking for? I don't know. I was just looking for a pullback. Maybe the 10-day, maybe under 52, down to, say, 51, 50, somewhere around there would be nice. But I don't really have any predetermined level. So I don't live in a world of mechanistic determinism where I have to, calculate everything out to the penny. HGSI, which is actually HGS Investor Software, has been a great recommendation. Any specific reports used for early identification before they start the big move up? I just look at the stocks and groups up on volume every day. So they also have a decent IPO list that you can look at. But a lot of times I'll see stocks moving and showing up on the stocks and groups up on volume list long before they break out. And I have this chart view that I use that I think Ron also turned into a screen, a code blue screen. So that's what I look at. I don't really look at a lot. Guess what? You don't have to look at a lot. A lot of people think you got to have magic screens. And what do you screen? What are the parameters you use? It's pretty simple. I just look for stocks that are doing well on any given day, looking at my lists on HGS Investor or stocks up on volume. To get a sense of what's going on. Someone says, QE's ending next month. This may change what has been the game for the past few years. Well, it might, but let the stocks in the market tell you that, so I don't really need to think about it otherwise. Someone says, I know this is beyond the scope of this webinar, but can you talk about Loco, the restaurant most are in the LA area? Yeah, my wife really loves El Pollo Loco, and she goes there a lot, so I've eaten their food. And I would have to say it's probably better than most of the greasy stuff you get at a lot of the hamburger joints, and that would include anything from In-N-Out, whatnot. But it's reasonably good. I think if you just buy the chicken itself, the grilled chicken, it's a pretty reasonably healthy meal. So, it ends in KFC for those of you who get a KFC hankering. But once in a while I get a craving. I think you do too, Dr. K, for KFC and also filet of fish sandwiches. And the market always corrects when I am craving them, and it did that last week. So we pulled back for the last few days. So, anyways, but I think the key for them is probably the fact that they can open a lot of restaurants going forward, and I think they'll move to other parts of the country, maybe even internationally. So I think that's potentially a good deal for them, and so everybody should jump in and buy the stock here. Let's see. Here, I'm going to buy 50,000 shares right here. There it goes. Okay, where was I? Someone asked, go below the low of the day or the close of the day? The intraday low of the day is what you want to be looking at. So, oh look, everybody's buying Loco now. So I mean, you just got a 620 buy on it. So come back into it. So if I sell into the rise, then I'll come back into it in here. So as it's starting to turn in here, you see you get the MACD stretch on the downside, and then you cross in here, so start coming back into it. Also watching Palo Alto Networks, it's hanging in. I think what they'll do is take it in here, test this low again, look for lighter volume on a Wyckofffian type of retest here, and then look for it to turn out. And I think it will probably head back up to the highs if the market does not fall apart. Other names I sold that I'm buying back, Taser came back, was up over 18 in the morning and then came all the way back in. Now you get the turn coming up through 1785 or so, so I think you can come back into it. Probably should have never sold it, to tell you the truth. My guess this thing's going to go, if the market doesn't get in trouble, I think it goes into the 20s based on what the longer term trends for the company could be. Now, that said, I bought this thing at like 42. Where did I buy? I bought it here, right here. And then it ran up, I sold into this move, and then it broke down, I thought it was smart. And then here's the 5-day pocket pivot here that could have been bought. And I've used this many times in this sort of formation, and the thing, it has a reversal here for another pocket pivot on the breakout. But of course it's an improper double bottom, which, you know, tells you absolutely nothing. And I wouldn't get hung up on all this labeling bases. And I think in a QE market, bases can look like a lot of weird things. Anyways, and now look at that thing, and that just amazes me, and I miss that. So that all just goes to show that if you see a stock that you like and you can determine the parameters of buying it, then go ahead and do it. You don't need us to bless it. Stratasys, SSYS. I've been watching this. It's trying to go, but I think you had to buy it off the 10-day in here, and I actually did buy it in here, and then it went up, and I think I sold it. I forget exactly how that played out, but that was the drill on that one. There's also the other 3D stocks, Triple D, buyout rumors again, push it higher, but it's not going anywhere. X1, you see a lot of articles on Seeking Alpha from people who love X1, but doesn't really get my blood boiling there. Let's see. Some more questions. Somebody says, you know that food genre. Well, not really. I mean, if you're asking me whether it's real Mexican food, no, it's not even close. So I wouldn't bother. It's something approximating real Mexican food. But I can tell you another thing: real Mexican food is not very healthy for you. So, all right, here we go. Pump Twitter. Nah, I don't know. I'm trying to figure out what I want to do here. I mean, I caught this move pretty well with a huge amount of stock, and I did well. So it's getting a little extended. I'm just going to hang out and see if I can't be opportunistic on a reentry, and it's fine. But because when you're up as much as I am right now, you know, the beauty is I don't have to force anything here, and I'm not going to. You know, I'll allow for maybe 3-4% drop off my peak. You know, as a normal pullback, but I'm not going to stand for much more than that. Gilead, is the high volume spin out 4 days ago a good thing or a bad thing? Well, it's a weird thing is what it is. It's a QE market thing. So I think if I own this and I had bought it down in here, this might be a time to be selling it. What do you think, Dr. K? Is this a problem to you?
I don't like that kind of pattern, actually. I mean, it introduced a lot of volatility into the pattern, and you know, that's never a good thing. It also, you know, that's basically a gap down in the pattern. You know, it doesn't close the gap, so it's not constructive. And if you're still holding this, I'd be dumping it.
Yeah, I mean,
that's an error in the pattern. You know.
Now, you know, that said, maybe it just turns and goes higher. Who knows? But in this market, I think when you have really nice gains, like 20% or more, I think you got to take them. At least part of them, you know. GWPH coming up through the 50/10. Okay, let's take a look at this. Yeah, it's hanging along here, but I don't know. I traded this a couple times. Fortunately, I made money, although it would have been very possible to lose money on this. And it just, I don't know. There are other things I can buy. So, let's see, ACAM. Got about 4 or 5 minutes left. Not really one that's been hitting my radar is something very viable, but it is coming up, to its high here. But buy point, I don't see any buy points. Maybe this would be a pocket pivot here, I guess. You're a little extended, but not really a name that gets me all hot and bothered. Excuse me. Dr. K. You there, Dr. K? You're there, right? Can you tell us, oh wait, no. Can we expect European QE that's starting next month to continue the QE effect on the U.S. stock market when U.S. QE ends?
Well, all these central banks are printing money or in various ways, and it's designed to keep interest rates at historically low levels. And they're all doing it, and none of them have said that they're going to be lightening up on it anytime soon. So what happens in Europe, or anywhere in the world in that matter, when a central bank steps up and prints more, that bodes well in general, just QE across the board. And in other words, these central banks work together. So as these other banks step up and increase their QE, obviously the U.S. is going to, in some form, some manner, do the same. They've been reducing bond buying by $10 billion every month, but there's other ways that other tools in their war chest that they can deploy to keep interest rates at currently low levels. So it's all good in terms of the QE, the strength of QE. Bodes well for it, and thus it also bodes well for markets that continue higher in sloppy uptrends.
Yeah, I'll give my view on that. There, I think that was a faster explanation than Dr. K's, but that's my whole take on that. Okay.
Yeah, it's all
can you tell us about the HGS Investor Conference? It's a 2 or 3 day conference, I guess, in Palos Verdes, in beautiful Palos Verdes, I would say. And I go and speak on Saturday afternoon, I think around 3 o'clock or so, and looking forward to it. And that's, I just show what I use on HGSI and how I use it to make money. And I actually started using it early last year, and once we basically removed focus from managing other people's money, and I decided to I started to discover some things on HGS Investor Software. My performance has gone through the roof. So I think it's very useful. It's been a very much a secret weapon for me for the last year and a half, roughly, since last March, say, and so I just go and talk about what I do. Now, I think other people there do the same thing, show how to use the system and get into all the nitty-gritty. I actually barely scratch the surface with it, and I'm able to use it to make money. So I think that speaks highly of the software. So, and it's going to have some new, supposedly I'm told I'll be beta testing some new features on the system which will really improve it and bring it up to snuff. So I'm looking forward to that whenever that comes out. Anyways, somebody says, virtues of front-running Gilmo. Yeah, somebody's front-running me. Okay, so, okay, everybody, here. Let's do one right now. Let's see. Find me a stock to buy. Let's see. A really thin one, and I'll come in. I'll buy 20,000 shares. Everybody jump in, and I'll buy 20,000 shares, and we'll push it up a buck. Okay, and then all we have to do is find some suckers to sell it to. Okay, so. Somebody says, thanks. TSM entered a joint venture with Panasonic in which they control 51% of and Panasonic agreed to purchase manufactured products for the next 5 years. So, okay. So that's nice. I mean, when was that? Back here? But it's a nice story. But so if you like it, it's coming in. You buy some shares here and test your theory. Not that hard. Let's see. Somebody says, I miss G-Pro as well. I'm pissed. Yeah, I wouldn't be pissed, because like Dr. K always likes to say that the opportunity of a lifetime can occur every 5 minutes. I would watch Palo Alto Networks. I think it's a 110 stock or better if it can hold the 100 level. And so, I just bought it back as it dipped under 100, and now we're starting to push back up. So why don't you guys all run that up for me? I like the Solar City coming in here. I think SunPower might be viable. Here, let me come in. I'm going to buy 5,000 shares just to test this. Let's just do it. That's good. Okay, that's 2,500 just went through. And I'm just going to hit it at market. If I don't like it, I can just get rid of it. So I just picked up 5,000 shares, pushed it up a couple of pennies. So it's not that easy to buy. But that's one to look at as well. I think solar's got some potential here, given the fact that you got this one moving or acting okay. This one's trying to set up. I think this is the one that could be really fun on an upside break. But you got to run this tight and not allow things to get out of control if it starts to fail, because it moves very fast. And you definitely have to buy it on weakness. So a day where it's down like today is better. But SunPower holding along, the ugly duckling theory is in effect here. If you have a run-up like this, and it's pulled right back to the 50-day line. You see, it's hard to tell here, I understand, but just trust me, this is the blue line here, and you're getting a pullback. Volume is light. It's not heavy. I think this is where you buy it. So I just bought 5,000. You guys can all go in and buy some and buy another, 50,000, push it up for me, and maybe I'll come in and add to my position, or I might sell it to you. So if you better front run me, other than vice versa. What makes it an improper double bottom rather than just a double bottom? That's a good question. But I guess you don't read O'Neill's books, but that's okay. You don't really need to. Actually, I'm kidding. I think everybody should read O'Neill's books. But the idea with the double bottom, here's one bottom, and then it runs up and pulls back, has another bottom. So you basically get a W formation. So I'm going to do chart reading 101 for people here. In a proper double bottom, it is alleged that the second low should undercut the first low to serve as a shakeout, clean everybody out. But I would think in a stock like this, what you're seeing happen as you come down, and when I saw this, I could kick myself now for not buying it, but something kept me from buying. I'm trying to remember what it was. I think it was Dr. K told me not to buy it. Yeah, it's all his fault. Right, Dr. K?
That must have been my evil twin.
Dr. K?
That would have been my evil twin.
I think we lost him.
Can you hear me? Hello?
Anyways, that's okay. But in any case, yeah, I'll blame it on him, especially since he's not here now to defend himself. But theoretically, that should undercut, and if it doesn't, it's improper.
Hello?
My view is just use pocket.
Can you hear me now?
Use Bible gap ups and whatnot, and use those to buy. Let's see. Dr. K says strange. Yeah, suddenly, Dr. K, you've disappeared. I don't know what's going on. Oh, that's fine. I can't hear you. But that's fine. I'm going to wrap up. It's 9:04, so we've gone 4 minutes over. I'm going to answer some last few questions. MNST. It's acting okay. You had a Bible gap up, but it failed. But there's nothing really going on right now. Not really a name I care for. What is your plan for being on the chat room? I'm on once in a while, but I don't really have a plan. Third time a charm concept. That's the rule of three, John. Exactly right. 38.50 on Loco. I think you can get there. I think it's trying to come out. So come on, you guys, push this thing, will you? Let's see. F5. No, I mean, this is acting well. I've noticed this, but I thought it's a reason why you're seeing stocks like ANET act very well. It's extended, so I'm not really a buyer of it. Somebody says, "Can we see the recordings of the HGSI conference after the event?" I don't. Why are you asking me? I don't put the event on, so you're gonna have to ask HGSI. I have no idea. Somebody says, We can hear Dr. K. I can hear you, Dr. K. That's weird. You there, Dr. K? Hit me with an I am.
Yeah, that's very strange. It's like it's selective.
That's interesting. Can everybody hear me? Huh. Not sure what happened there, Dr. K. But in any case, I think we're done
Yeah,
for
I guess
now.
it's just the audio clip in the software.
Basically get an idea of what's going on. I think the market's trying to come out of this, so you guys know what I think looks pretty good here, and we'll just have to see how things go. So, Dr. K, you can give everyone your sign off.
Yeah, can you hear me again? Can you hear me again? Yeah, I guess you can't hear me, but others can.
Still can't hear you.
The audio level is fine. The audio level is fine. So, yeah, at any rate.
There we go. I just fixed you. Okay, there's a little button here that was muting you to me. Ha! Okay.
Aha! Okay, good. Well, yeah, at any rate, we'll see which way this market breaks. You know, the clues will be in the leading stocks and what they do, since their downside is greatly amplified when the markets really do start to correct. And by correct, I mean, you know, if they're off 1 or 2% off their peak, that in these times, that's a correction. But we'll see it in the action of the leading stocks, and that 1 or 2% correction can often at times lead to a correction that extends into 4, 5, 6% territory on the Nasdaq. So MDM rests in cash for now, and stay tuned to see what happens.
All right. Thanks for showing up, everybody. We'll catch you next time. Take care.
So long, everyone.